flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Roll call, please.
Mrs. Allen? Present. Mrs. Price?
Present.
Mr. McGibbon?
Present.
Mr. Ellery? He's running a little late. Mr. Austin?
Here. All right, with that, we have our study session for the 2021 financial statements and the USFR audit. To introduce our guest, Cynthia Rowe, the CPA, you were the primary auditor, right?
Yes, audit lead, and we also have the audit partner on the job, Mike Corey.
Okay, welcome. Thank you. So with that, I think it's your and Greg's show here.
So I invited Cynthia here today so she could go over the findings within our audit and to discuss any questions that may arise due to those, as well as our financial statements. I understand the financial statements is about 110 pages long, so it's really intimidating reading. So with that, I will turn it over to Cynthia and let her go through the audit. Maybe talk about the process a little bit before we actually go into the findings.
All right, yep, so we were engaged to perform the financial statement audit as well as the USFR compliance questionnaire audit. The financial statement audit is more numbers based, so we're looking at the different accounts that the district has, such as revenues, expenditures, the cash that they hold at year end, as well as any liabilities that they might have. And with that, we were also engaged to perform the state audit, which is a document put out by the Auditor General, which is what you have in front of you. They put out this document yearly. They have 175 questions on it, all of which we have to answer either yes, the district complied with this requirement, or no, the district did not comply with this requirement. And each question has like several different requirements within it as well. So I think we've calculated about 400 to 450 total requirements that we're testing through this questionnaire. But I'll pass it over to Mike, who's gonna go over the financial statements a little bit, and then I'll go more in detail into the questionnaire.
Yeah, my understanding is you don't have the financials hard copy yet, which
No,
is
not yet.
it's coming from the printers. You've got the electronic copy, so I was going to go through and highlight certain pages, but since you don't have it in front of you, maybe I'll just talk a little bit high level. But certainly after the meeting, if there are other questions, contact us through Greg or the superintendent. We can address those questions if there are any with the financials. So, but I will start, aside from the financials, there's another letter that you should have received probably last week. It's not, I see that it's not attached to this agenda item, but it is the governance communication letter, and that's something that we issue every year. It's really just a high-level summary of what the audit is and what we found. Different areas in there that talk about qualitative aspects, quantitative aspects of an audit. Talks about the fact that we had no significant difficulties in performing the audit, which is obviously a positive. It talks about audit adjustments, the fact that there were no disagreements with management, the various compliance aspects that we're looking at, kind of like Cynthia just covered. And then there's a section in there about responsibility for fraud. There's a fraud checklist attached to it. There's the engagement letter attached to it, the general representation letter. So just want to highlight that. That's required under auditing standards that we issued that letter directly to you as board members. Again, just a summary of the audit. So when you do get a chance, look through that quickly.
Have we received that?
I believe I emailed it last Friday to Mr. Oserby. I don't know if you've gotten that yet. I mean, the financials just came out last week, Wednesday, so the earliest we would have sent it is last week. So yeah, it probably was not in time for this agenda item, but once again, it's a summary. We're going to cover everything that is mentioned in that letter here today.
May I interrupt? Do you have a copy? I can go run photocopies real quick if we have it with you.
It's only a 4-page.
Okay, I'll go run copies for everyone. Thank you.
So as far as the financial statements, I'll just kind of move on that. The financials themselves, no different than what we've issued in previous years. The page one is your audit opinion, and for fiscal year 22, it was the unmodified or clean audit opinion, which all an audit opinion means is, when we performed our procedures, nothing ccame about that was a material misstatement in the financial statements. All the various testing that we do on the financial statements, nothing came out that indicated that something was materially misstated, whether it's assets, liabilities, revenues, expenditures. Within the report, there's what's called the management's discussion and analysis. That is on page 7. The MD&A is really management's ability to, there's some year-to-year tables in there, comparisons to the prior year numbers, and that's management's, keep going there to page 7. So it's pages 7 through 15. Actually, if you want to go to page 10. And this is in every annual report that is issued for the district. So that what we're looking at there is the comparison to the prior year activity statements. You can see the program revenues, the general revenues, and if you scroll down, you've got some of the expenditures. This is part of the management's discussion and analysis, and the point of this part of the report is just to kind of give you that historical comparison to the prior year. And then you can see the bulleted items there where management has offered their explanations on why numbers have gone up or down from one year to the next.
God, it's awesome.
That's
Crazy. It's not like computers, so it's.
I guess point being, I wasn't going to cover any numbers specifically unless there are questions on those numbers right now. But point being, management's discussion and analysis, kind of an executive level summary of the financials themselves, the core financials and notes, the note disclosures. So when you get a chance, certainly that would be an area where you put some focus. If you don't have the time to dive into the deep numbers, which really start on page 20. Page 20 is what we refer to as the government-wide financial statements. And under governmental accounting, you've got your fund-based statements, whether it's your general fund, your classroom site fund, but then you've also got this government-wide approach, which it takes all the individual funds and kind of smushes them into one single column, and it incorporates some full accrual accounting. So like you can see there, your capital assets are included on that statement, whereas you won't see your capital assets included on like a general fund or the classroom site fund, because it's just got a different focus. So we're talking about fund-based focus versus government-wide focus. And these first two schedules on pages 20 and 21 are kind of your government-wide. So 20 would be like a balance sheet at a for-profit business. 21 would be like your activity or your income statement, if you will, at a for-profit business. But this is the government version of that under GASB accounting standards. Page 24. Sorry. Page 24 is where we kind of get into the fund-based focus. So now we're outside of that government-wide, that kind of condensed single column format, and now we're into the individual columns. This is where you can see your actual general fund, and we're looking at the balance sheet for the governmental funds. You can see ECTC, extracurricular activities, fees, tax credit fund was a major fund. And that's one other thing to note on this page. When we're talking about fund basis financial statements like we are here on pages 24 through 28, I believe, we're talking about major funds. Once again, that's prescribed by GASB accounting standards. The major funds are usually dictated by the size of the fund, so they can change from year to year. General fund will always be a major fund, but some of the other lesser funds can become a major fund and sometimes drop off. Anything that's not presented there on the face of the financials is in the last column called non-major governmental funds. So that'll be kind of a combination of the, if you go to page 28, 29. Oh, one more there, right here. So you can see that non-major governmental fund. So anything that's not a major fund kind of gets condensed into the non-major column. And that's just prescribed through GASB accounting standards. Page 31 of the notes to the financial statements. Once again, the purpose of the notes is just to provide more detail on the numbers. Most governments focus on the capital asset note, the debt footnote. Obviously, that's where most of your investments are and where most of the money that you owe are going to be displayed, or is in those two footnotes. So that in fiscal year 21, that would be footnote 6, 7, 8. The last part of the report is starting on page 60, is where you get into some of the non-major funds that you don't see presented at the front. And again, these are the lesser funds. These are not unimportant from that perspective, but more these just do not have as much activity or balances, so they're considered non-major funds. But back here is where we show the budgetary financial statements. So this is where we'll present what you adopted or what you had as a revised budget versus the actual activity for the fiscal year. And you can see that there's a budget actually for each of the non-major funds in this section of the report. Once again, no differences than what we presented or what we've provided in past years in terms of the financial statements. This is the report that traditionally Continental Elementary has issued. I think maybe 2 or 3 years ago, you guys issued like a CAFR, or what is now called an ACFR, where you go out for awards with the ASBO and the GFOA organizations. I think we stopped doing that a couple of years ago, but really all that is just even more detail than what you're seeing here. This is the bare minimum of what governments need to issue in the state of Arizona and nationally for that perspective. So, I'll kind of turn it over to Cynthia here. The last part of this report is what we call the government auditing standards, or the report on internal control. Some people call it the yellow book, some people call it GAS. This is all required under auditing standards that if you're a government and you receive government funding, we are required to issue what's called a GAS letter, or a report on internal control. And really that's just a different set of audit requirements put out by the federal government that we have to adhere to. And when we perform an audit in accordance with Yellow Book or GAS or whatever you want to call it, we have to issue this letter, which essentially says we did or we did not come across issues. So when you think about audit findings, you can have at the top of the list, if you will, would be like a material weakness. That's the most severe, probably. Below that would be a significant deficiency. Below that would be some sort of control deficiency that we may or may not report in a written report. And then you've also got the state compliance that Cynthia's going to go over with the USFR. So different varying levels of an audit finding. It can fall anywhere in there, and sometimes it can be a state compliance, and it can be a state compliance issue that's so severe that it also ends up in this GAS letter. So just competing standards on how we perform the audit, and therefore where we have to report findings that we come across. So I'll let her talk about the finding that we do have in this report for fiscal 21.
So if you were to turn to page 93 in this report, we did come across one material weakness in internal controls, and this is due to the cash reconciliation performed against the county school superintendent. There were, as you can see on the context section of it, a few unreconciled differences that led to the district's records when we came to audit not being accurate. So we had to post audit adjustments for them to be able to be presented accurately on the actual financial statements, which is what led to this material weakness being presented here.
Was it several or a few?
Well, because it's I guess relative. It's in different funds. It's we did identify like one expenditure for the bond payments not being posted to the general ledger, which is a pretty big amount, as you can probably imagine. So that what materially misstated the fund balance, and then just one revenue posting one revenue received that didn't get posted, and several others that we couldn't identify what they were for.
How many that you couldn't identify that they were for?
I couldn't tell you about the amount. I think it's around $70,000.
Yeah, it's the third bullet that's in that.
So it's not like it's like items that weren't posted because we can't tell there's many things going on. It's just a balance amount that we couldn't trace back or agree to the county schools superintendent's record. And it may be on the county school superintendent's records, it's just the fact that it didn't get researched to the point where that either the county school superintendent posted a journal entry or the district posted a journal entry. So it just needs to be researched to know whose records needs to be adjusted.
And this is that letter?
No. That's not, that wasn't printed, that's the big report that didn't get delivered in time.
This is on page 93.
So it's on page 93.
Uh-huh. Of the 107 page.
And is a lot of that because the county is so far behind? And it's the timing, like they might be on, I'll make this up, November, and here we are in early March.
It may be in part because of that, because yes, the cash reconciliation has to be performed once the county has their records ready, and sometimes that is delayed by a couple of months. So we're always trying to catch up with the county and identify stuff or transactions that they might not have sent to you or you might not have sent to them. So it's various reasons, but yes, the county being, like the timeliness of that definitely comes into account.
But you couldn't do the adjusting entries until you had caught up, is that correct?
Correct, but
So we must be caught up because you did the adjusting entries, correct?
yes,
So we are caught up, it's not a lag time,
as of June 30th,
correct?
which is what we were auditing.
So we're already caught up in order for us to do the adjusting entries.
For the items that we identified, yes, but
As
the
material
fourth
weaknesses.
bullet or third bullet there, we couldn't identify what that was for.
But that was $70,000 that we don't know what it is. So we're just kind of writing that off as,
Well, I don't know that our recommendation would be to write it off. I think our recommendation would be for management to research that further and find out if it's your records or if it's the county school office who is off by that amount. And it could be a combination of both. As your auditors, we don't have the ability or the resources to go in and, audit to the single dollar value. And I don't think you want to pay us to do that. So what we state is we get it to a number that we say, okay, we're okay with that. We can still issue an opinion, even though we think there could be a misstatement here, but we don't have enough information to know whether or not there's a mistake in there. It's going to require some more investigation on the management side. We're telling you, we're reporting it to you to let you decide how you want to look into that.
And part of the difficulty with the monthly reconciliations is, here's an example, just today, I'm posting revenues today that the county received in December. So I do my monthly reconciliations to the county based off of a trial balance that they have. And now I've got to go back once they finally issue a final copy, which could be 2, 3, 4 months in the past, and re-reconcile. So I'm having to reconcile to the county twice for a month that could have been 2, 3, 4 months ago.
And that is the way the state of Arizona works. County by county, they all have their own county treasurers, obviously, they all have their own county school offices, and some counties are more proactive, they're faster at this process than others, and right now, and sometimes counties are really good, and then they have a changeover in personnel, and they develop a lag time, and eventually they become good again. So it's kind of a cyclical thing, and right now, you're not the only one in Pima County dealing with the issue. Others are also dealing with it as well. So, they may not always result in findings. They may identify other controls or other ways to perform the reconciliation. But they're all in the same boat because you're all dealing with the same county treasurer and county school office.
And also within this one, and Cynthia, correct me if I'm wrong, when I was doing that reconciliation, I did reconciliation and not the best practice.
Yes, so, and we noted that once you get a chance to read through this, we did know that the reconciliations were performed monthly, that management was performing doing those reconciliations on a monthly basis, and they were timely as far as how timely the county was providing the trial balance. Is just taking it a step further and analyzing the reconciling differences and identifying whose records needed to be adjusted to that for what.
I think that's what that first bullet is there, Greg, is I think that's what we're talking about. On the bottom of page 93. That's what we're reading. It's the first bullet under the context section of this finding. I think that's the aspect of this finding that we're referring to. That you're doing the reconciliations, it's just the mechanism that we're using for the reconciliation.
But unless there are any other questions on the financial statements and this gas letter, I was gonna move on to the US Work Compliance questionnaire.
So I know Mr. O'Leary just got here, so I know you're coming in from Tucson.
I don't want anybody to reiterate what's already gone on, and I don't know exactly where we are, so.
So the intent was, since you don't have the bound copy report yet, and we did send it electronically, you have preliminary questions on the finance report that you saw that you wanted to ask, but between now and our board meeting on the 21st, if you have specifics, you could email Greg and I, and we'll forward it to the team, and then they can respond prior to the 21st board meeting. But if there's anything right now that stands out, because we haven't really shouted asked a few questions right now, and Steve, but the plan was it to go through the entire financial report?
But I do have some questions
okay.
on the financial report itself. I don't know that they're gonna affect in any way the answers as far as our acceptance of the audit.
Right.
I've got a few questions that I've especially got some long-term questions and concerns about our burgeoning pension liabilities. And I know that we are not alone. I'm sure every school district that belongs to the AR, the retirement system for public employees, is in the same situation. But we had an $834,000 increase in pension liabilities in 1 year. And it's already up to $5 million, which is 158% of our covered payroll. And this during probably one of the greatest bull markets we've had. We've got 0.03% or something, or 3% of the total statewide proportion of the pension fund. And I mean, a simple division is going to tell you how big the overall unfunded liability is at the state level. But no matter how you look at it, this board and this school district is responsible for paying out the benefits to our teachers and our administrators and anybody in Continental. So if the whole fund goes south, we still have to pay those benefits out of this school district, as far as I understand. And I just don't understand. Are you getting these kinds of questions from other school districts, from other public entities that you audit? And do you see any movement on the part of the Arizona retirement system to either change the discount rate so it more reflects what true returns are, which would unfortunately cause higher retirement contributions on the part of the school district and impact our own year-to-year budget? Could you just walk me through that just a little bit?
I mean, I will to the extent that I can. I obviously don't work for the SRS, so I don't know exactly what they're thinking. They do various presentations at different industry conferences that we attend. And I guess to your point about the discount rate, and really any of the variables, because there are so many variables that go into it, the different actuarial studies that they perform. They're legally required to perform under state statute. Every 5 years, they have an actuarial study performed where they look at discount rates, they look at benefit terms, they everything that goes into the actuarial calculation, they're required to get a 5-year study every year. It's disclosed in your financials, it's disclosed in all the financials. So they're evaluating those things. And there's a ASRS trust board that evaluates whether or not they want to accept those. When they do make changes in actuarial calculations, they choose whether or not they want to increase or decrease the discount rate, the expected investment return rate. I'm not speaking on their behalf, but I think that there is a lot of work that goes into that for them to decide whether or not they're comfortable with the factors that they're using. The end result is this. Little Continental owes $5 million if they were to go under it. That's a concern that every school district in the state has. I don't know what you do about it though. Some governmental entities will issue pension obligation bonds because they don't want it, but that fiscally probably does not make sense, especially with ASRS because it's a cost sharing plan. And a cost sharing plan just means that they don't have an individual account for you. You're just part of the overall pool, which is the 0.03% that you're talking about. Even that number changes from year to year because it's all driven by the amount of contributions that every school district, and it's not just school districts, it's governmental entities. So it can be cities, it can be towns, it can be counties. So there's so many factors, there's so many variables in it. You can't throw cash at this number. It's not going to make a difference because it's a pooled count. Does that make sense? Like they don't have a number up there that says Continental owes $4.9 million. They've got a number up there that says the state of Arizona owes billions and billions to fund this liability. So if you had $5 million laying around and you gave it to them, you would probably still have a $4 million liability because it's just not treated that way. For those who might be familiar, the public safety retirement system, the retirement system at the state level for the police officers, that is an individual plan. So every city has their own plan. If they had a $5 million liability and they had $5 million in cash, they could shoot it up to the state and that would wipe out their liability. But it's because it's structurally completely different the way ASRS is structured. Now there's some benefits to the pool though too. When there's good investment returns, everybody gets the good investment returns, whereas PSPRS, some entities may get a good investment return and some may not, depending on how their pools are invested. So I don't know if I'm answering your question. I don't know if we have the ability to answer.
I guess my only statement is that, if all of their actuarial assumptions were solid, we wouldn't have a pension liability that grew by 20%. And that's what concerns me.
And my question is, did you address that at all in the report?
Address
the issue that we had a pension liability that grew 20%?
Well, it's standard note disclosure. It's in there every year. Yeah. In note number 8, changes in long-term liabilities, your statement of net position that we talked about when I said that's your government-wide financials, that's like a full accrual basis. The number is right there on the face of the financials. That's required under GASB auditing standard, accounting standards that you include that liability. Look at any school district in the state, they will have.
Which is a change. About 5 or 6 years ago, that did not have to be reflected. That was a government accounting standards where it's changed.
You're exactly right. And there was a lot of pushback on that.
I have another question, I'm not so sure I understand the difference between committed funds and assigned funds. This is on page 38 of the audit report. It says, that committed funds can only be used for purposes imposed by governing board actions. And we don't have any so-called committed funds. Assigned funds, it also says none-reported. I'm not so sure, could you define for me the difference between committed and assigned?
So this is another GASB area, something that came out probably 8-9 years ago. And you can see it there on that page that's up there. The fund balances, so at the fund level, you can have non-spendable, which is something that it's just not even cash, you can't even spend it. Below that is restricted. Most of your federal grants or state grants are restricted, which means an entity outside of the school district says you must spend it in this way. Below that is committed. So these kind of go in a certain hierarchy here. Below that is committed. This is going to be something that requires a formal action by this room. You as governing board members, you would have to designate certain funds and certain monies as committed. That's what makes something committed. Assigned might be something where you've given her responsibility. You've given her the ability to assign fund balances. So it's a hierarchy. Committed it's a stronger word than assigned, I guess. It's the way to put it. It's not as strong as a restriction. A restriction, you guys can't change it if you wanted to because it's coming from outside. But a committed, you can. And then what this is saying is that under the GASB standards, the commitment can only occur if you have a policy that says you will make commitments. And to our knowledge, you do not have such a policy. You would first need to adopt a policy that says we want to commit funds, and then you would have to pass an action that said, this dollar amount for this fund is what we want to commit for this purpose. Don't ever spend it until we tell you to release it. That would be a commitment.
Okay. The audit also said that we have unassigned funds of around $1.6 million. So any of this money could be committed or assigned by action of this governing board if we so desire. Is that correct?
Correct.
Yes.
In the simplest terms, yes.
If we adopted a policy.
Pardon me?
If we adopted the policy.
Yes.
Yeah, we don't have a policy to do that right now.
Okay. And I guess the last question I have on page 44 talks about contingent liabilities. Did you make any evaluation on the expenditure of government funds, whether they be grants or whether they be ESSER funds, as far as the proper use of those funds?
We do a sampling transaction for that, but the district did not reach the level of federal expenditures it would have needed to need a federal audit. So we didn't specifically test against like the ESSER requirements because in FY21 you weren't there yet. I do believe for FY22 we will need a third audit, which would be that federal audit to ensure the expenses are being incurred for those purposes. And just for your record, so you know, it reaches that level when the district spends $750,000 in federal monies.
And an important distinction there is that not that you receive $750,000, but that you actually spend. Because you can receive $3 million and not spend any of it. Maybe you put onto it for another year. But that year that you got $3 million, it still would not trigger that federal audit until you spend the money.
Okay.
Ready? So I think if there's no further questions on the financial statements, we can move on to the state audit, which is the USFR compliance questionnaire that you do have in front of you. And like I mentioned, this is a document put out every year by the Arizona Auditor General's office. They put out this document based on different statutes or the USFR compliance or the USFR manual. Just asking to make sure districts are following these statutes and the manual. They have about 175 questions in the questionnaire, but each question covers several different requirements, which we calculated to be about 400 different requirements that we're looking for, whether it be a statute or a manual policy that we need to look at. So if you started at page 2, you can see and I apologize, it's so small, it's just the way the Auditor General releases this. It's an online form that we can't enlarge or make small. I would want to make it smaller, but we can't enlarge it. So if you were to look at the format, there's several different sections. We start off with a section on governing board and management procedures, but it moves on to other sections such as budgeting, accounting records, student activities. I won't go over all of them, but I just want you to get familiar with it. You'll see like a list number of questions, like on this page, we have 7 questions, and to each of these questions, we have to answer either yes, the district complied with the requirements of these questions, or no, the district didn't comply, and then you'll see a comment right below it specifying what we ran into where the district didn't comply or didn't follow that specific procedure. So I wasn't gonna go over any of the yeses, but I am gonna point out the no's as we go through. So the first, and these aren't page numbered either, so we'll just have to follow along here. But the first no that we have is for governing board and management procedures, number 8. And this was due to when we had a change in management, the student activities treasurer had to be reappointed by the governing board, which didn't happen over the last year. But I believe this already went to the board right after the audit, so it already got fixed for the next year, but we do still have to report it during the year that we were auditing. If you keep scrolling down, we move on to budgeting. We had one budget that didn't have a notice for public meeting in the December revision. And these are all just requirements, like this specific question has over 20, I believe, over 20 requirements that we have to look into, and this is just one of them that there was no notice in the December 2020 revision. So then moving on within accounting records, this is a very broad question that the Auditor General has put out. They just want to make sure that districts are following the USFR chart of accounts to ensure there's districts within the state are following the same sort of coding and for comparability for them. We did note federal revenues that were recorded as state revenues. We noted one transaction where an expenditure for food was coded to a different code rather than what the USFR chart of accounts has food at. And then lastly, we noted just a liability that was on the general ledger that was adjusted improperly and hit a liability rather than cash. Within accounting records, we also look at other areas such as adjusting journal entries, and we want to make sure that there is a segregation of duties between who's posting adjusting journal entries. Out of the sample that we selected, 6 of the journal entries that we looked at were reviewed, or there was any notation that someone other than the preparer reviewed it or looked at it before it went to the accounting system.
And the district's general ledger, did you review the entire general ledger?
Pretty much. We looked at the trial balance first, so just like the broad picture of the figures at the end of the year, but we do request the general ledger and sample specific transactions from there, but then just depending on some of our test work, if there were variances or any other items that required it, we did go into the general ledger and look at it.
Okay, what was your sample size?
Sample size for expenditures, we looked at, 40, but we also look at like 5 student activities disbursements. We look at other cash receipts for other, credit cards. We also look sample 5 to 10 transactions for credit cards. It's just a various sample throughout. Which one's the question that has the sample size?
Well, in number 2, you sampled 15 of 82 items.
Yes.
I'm questioning item number 1.
Oh, item number 1, the accounting records, is that what you're talking about, the coding issues that we noted there?
Yes.
Yeah, so, that can come about from different ways, that's not just sampling. That, like she said, we're scanning the trial balance, we vouch revenues, so like that 130,000, that's probably, we saw on the trial balance that you had state revenue of 130,000, so then we said, give us the support for that. We looked at it, we said, this is actually federal. So, that's not really a sample, that's really just substantive audit test that have covered that. So, and like Cynthia said, this is a very broad question. So we're bringing in the results of what you see here. That's the results of various different types of audit tests. It's impossible to say it's all from this sample.
So on that one, and Cynthia, correct me if I'm misspeaking, we coded it the exact same ways that we received it from the county. not knowing that it was a pass-through payment from the federal into it from the state. So that's why it was coded as a state revenue versus a federal revenue.
Correct. So it's one of the COVID monies received. It came from the federal government. They gave it to the governor's office, who acted just as a pass-through. So ultimately, it did end up being federal, but it's just the way it was coded when the county passed it on to you guys. We also look at the transfers. So there's specific transfers that the USFR chart of accounts allows for, just so that the district's not moving monies between funds where it shouldn't be moving, or if the money's restricted for something, you're not moving it to a different fund where there's no restrictions. And this was probably just a misunderstanding of when management was trying to clean up those cash reconciliations to write it off. A mechanism was used to utilize transfers as that, rather than maybe researching it or reaching a point where it could hit a different account code. So the transfers accounts codes were used, and that's why we have noted here that those transfers weren't allowable as the USFR chart of accounts allows for.
And that goes back to, if you remember, we talked about at the beginning how we couldn't tell you when the last time we balanced the county treasurer, and that I was waiting on the auditors to show up and have that discussion with them. So when I did talk to Cynthia, so she knew it was coming for this audit, and we did a transfer in and transfer out to balance with the county, where instead we should have used a function called a fund balance to do that instead.
And that's where we know, like, there was a sample of 28, we actually looked at the 28 transactions. And the remaining of this section is all related to those cash reconciliations that we've already discussed. So if you were to look at 4, we noted that the reconciling differences weren't researched and resolved. Number 5, we know where the unreconciled differences that we could identify where. In number 5, we know the 72, or it's just a reiteration just based on how the USFR is asking the question. Sometimes we have to have the same answer for 2 questions just because they're basically asking the same thing.
But this was also a material weakness that was identified
This was part of that
a year before.
in the 20,
20 or 1920 on it.
yes. And this is part of the attempt to get that clear.
So it wasn't cleaned up in the 20 audit. We didn't fix it after the 20 audit, and you're reporting it again now in 21. Thank you.
The next note we have within the cash and revenues section is on question number 3. The district also has not just the cash at the county treasurer, but the districts are also allowed to have cash deposited in several bank accounts. One of them being the miscellaneous receipts clearing account, which is where the district is receiving all those electronic payments from parents, whether it be for extracurricular or student activities, just at various just from various sources. These accounts, or this account, does have to be deposited with the county treasurer on a monthly basis, just to make sure that the revenue is reported in the correct year, which we noted wasn't done until later in the year, or wasn't done monthly during the fiscal year that we're auditing. And then on number 4, there's also, the district also holds a bank account for food service. So this would be for any payments that the students are doing at the school site or parents are depositing online for them. This account only allows for checks to be written to the county treasurer. However, we did note several checks that were written out to parents to refund them for money now that the food was free pretty much last year. However, that the district wasn't allowed to do that out of that bank account. They would have needed to clear it out of the bank account, move it to the county treasurer, and then write checks from the county treasurer.
So just to be clear on that, if a refund has to be made, I'm assuming this is to a supplier, for example?
No, so what these are, parents had cash on their student accounts for food service.
Right.
And either they were leaving the district or they had put money in knowing that their students were gonna have to pay for food, but then it became free. They wanted their money back.
So the
And
proper procedure would be to transfer that money to the county treasurer and ask the county treasurer to cut a check to the parent.
If you ask the state or something.
Okay.
It was a COVID year, so, you guys decide if you can justify that, if you can, it's required to be reported here because it's a question that we have to specifically look for. Doesn't necessarily mean that it was a sound or unsound management decision, because if you can read between the lines.
Within cash and revenues, we also look at several different deposits, whether it be into those different bank accounts that the district holds or for different restricted activities. We sampled 5 deposits for auxiliary. We couldn't completely reconcile it. The district deposited actually more than what the support provided for, so it was assumed that it was a donation that just didn't get written down or just didn't agree at the end.
So the $2
Mhm.
discrepancy.
Yeah, but like I said, it was more you deposited.
it was one of those, here, just keep the changes, and then, when we wrote out our receipts for the actual amounts. And the receipts matched everything except for these $2.
So then that question was specifically for auxiliary operations, but if you go to question number 23, that's broader, and that actually includes the whole sample that we did. So we did have to repeat that one in addition to 2 of 5 student activities deposits that we reviewed that we couldn't find, or we couldn't find any support for, or the support wasn't issued when the clubs collected the money.
Is that one of the ones where they do a fundraiser selling popcorn and the teacher probably didn't have an adequate log of
Correct.
The easiest thing for this one is when we get a check from a student that the parent wrote a month ago, if we don't put on there the date that we received the actual check, that's how you get this copy. So now we're making sure we put receipt dates on every single check.
That's actually for 24. But what you were talking about for 23, yes. So it's when they have a fundraiser and they sold 20 lollipops. So they should have gotten $20, but they just didn't write that they sold 20. They just gave you guys 15. So that's the sort of support we look for. And like the club sponsor signing it and ensuring that it's proper. And then on 24, that's where the timeliness comes in. The Auditor General wants school districts to be timely in depositing any cash that they receive, just because it is it's very easy to just misplace cash or for it to be misappropriated. So we test for that to make sure deposits are made timely. For 2 of the ones we reviewed, we couldn't determine if it was deposited timely just because it wasn't stamped, like Greg mentioned.
And your sample there was 20 out of how many?
They don't
Like
ask us.
1,000 or
They don't ask us for
100?
that, but
We could get you that number. It would take some
Yeah.
time to-
Yeah, we
We
would
would
have-
actually probably turn it correctly. So, how many cash receipts do you think you have for a year?
yeah, because we just go either to the bank statements and select deposits from the bank statements, or go to the general ledger and just randomly select line items within there for deposits. But since the Auditor General is the ones that's asking for samples and populations, this is not a population that they asked for, so we don't have it written down here.
Was there any reason why you selected 20?
We just select from different accounts, so we do a standard of 5, so 5 student activities, 5 in the clearing account, 5 in the food service account, and 5 in the other account. I can't remember exactly what other. Yeah. And then number 25 is a repeat question of one of the ones in the accounting record section for that material weakness of the reconciliation that we've already gone through. The last question that we have as a no in the cash and revenue section is related to again, the bank accounts, and those were being reconciled up until February 2021. So when we came for the audit last year, we noticed that, and we pointed that out, and that got corrected after the audit last year, but it did still have 6 months in the current audit year that we're auditing now. The next section is property control, fixed assets, stewardship items. We have to go through these and ensure the district's maintaining an accurate list. So on question number 1, you'll see that we are saying that the district included additions that did not meet the district's capitalization threshold. When we reviewed the capital asset listing, we noted that there were a few items under 5,000 that were included in the capital asset listing. However, the capital asset listing is for those assets that are worth over $5,000. There's a stewardship listing where those go to, so those got moved after audit review. And then within capital assets as well, we made sure that any purchases that the district made for fixed assets during the year are included in those fixed asset listings. Through review of the capital outlay expenditures, we noted that of an initial review of the fixed asset listing, 2 vehicles were not included in it, which got corrected after audit review.
Were those the
The vans.
vehicles? Vans,
The vans. We missed clicking a button.
right?
And then within fixed assets for number 5, we also go out to the school site, and from those listings, we select different items randomly and go look for them and find them on the school sites. And then we also, once we're on the school site grounds, if we see a tag number, we grab that tag number and go type back into the listing to ensure it's correct both ways. For one of the 5 assets that we looked at, we found the asset, however, it was just moved to a different location to what was specified on the listing.
And that was a floor plan.
And then for another asset, we noted that we identified it, I believe, based on maybe serial numbers. However, there was no tag on it. The next question, number 8. Whenever the district disposes of any assets, we have to see board approval of the disposals. There was one item that got disposed in the fiscal year that we were reviewing, which we didn't see approval for. Then we move on to the expenditure cycle. We review we sampled 46 different transactions. We reviewed just different requirements for purchase orders, approvals, receiving reports. And the one thing we have to notice is just for 3 of the purchase orders that we reviewed, the purchase orders was approved after the invoices were received. And then for 2 of those, the purchase orders was approved after the services were performed or received by the district. And that's just to ensure budget, just for approvals and budget capacities there before you actually incur the expenses. Number 5 is related to student activities. We noted 2 student clubs who had negative cash balances at year end. And we also sampled 5 transactions where we couldn't, and for one of them we didn't see student approval for the expenditure. Moving on, we have travel, which we don't know anything in, credit cards, also looks pretty clean. Procurement, so there's different requirements that are needed to be followed for procurement, one of them being receive and written quotes for any expenditures between $10,000 and $99,000. For one of 5 of the purchases that we reviewed, we couldn't, there were 3 quotes in file for the purchase. And then we also looked at the sealed procurement or our bids or RFPs. For this, we look at several different requirements. One of the requirements being that when the district receives the bids from the vendors, that they're stamping when they received it to make sure it was before the deadline. And we noted that a few of the envelopes received weren't stamped or were kept, so we just didn't have that support to be able to answer that question. I'll say yes. And then within these bids as well, anyone who's evaluating the bids, who's reviewing it to make sure everything's received, who's on the evaluation committee should have a conflict of interest statement for that specific bid in the bid file. We didn't see those signed conflict of interest forms for these 2 bids that were issued last year.
One of them was the reveal math, because we weren't aware that they needed to sign the disclosure form. So that's why when we did the ELA reviews, everybody signed up and they were ready and in the binder now.
The district, for procurement, districts are also allowed to use those contracts issued by others through a co-op, such as Mojave or like the state contract that you guys use. However, you do have to perform some sort of due diligence, which is typically a checklist that you go through to ensure that other requirements are being followed. We didn't see any support for that, so we had to answer no to this question.
I have those for you now.
We'll look at them next year. And then within those due diligence forms as well, the district has to, in writing, say why they're using the co-op instead of going out to bid themselves. Which most of the time is just a statement at the bottom of the due diligence forms that's being signed by the appropriate employee. And then moving on, I don't think there was anything else within procurement or classroom site. Payroll was also pretty clean. Financial reporting, so this is for the IFR submitted to ADE. And we have to make sure we agree all the records on the USFR, on the AFR, and compare them to the district's records to make sure that they agree. We just noted that transfers didn't agree for a few of the funds. Well, all the revenues and expenditures and cash that consisted. And then we also have to make sure that it's submitted timely to both the county school superintendent and the county treasurer. We couldn't get any support for the submittal of the, to the county school superintendent. I did talk to the county school, we were on the phone with the county school superintendents. They knew they had received it, they just didn't have any support for it, and it wasn't kept at the district side either. So we just couldn't answer yes because we didn't have the physical proof for that. Within the financial records section, we also look at what's called the SDER report. So the school district employee report that's submitted to ADE, and this is not for financial figures, but for employee figures. In this report, the district reports however many FTEs they have in the different departments. So we selected 5 positions and agreed it back to district support, but for 2 of them, we couldn't agree it to the supporting documentation. The next section is student attendance. This is a pretty big section. The first no that we'll see is on question number 3, which is for when students are leaving early or coming in late. The auditor general wants to make sure that the district is reporting those absences properly. We selected 5 students, and for one of them, the absence wasn't reported correctly to ADE. And then you'll see a couple notes there, but it's just saying that the district is not a CTED district. But the next note you'll see is not until question number 20. And I think this relates to the same as the earlier question for absence information. The district, is it Synergy? Remember what? So within Synergy, we could see that the absence was proper and correct. However, the way it made it to ADE's website or to ADE, it was different. So I think Albert was looking into it, and they were going to do a little bit more research as to see why it wasn't reconciling, or the absence information wasn't transferring over properly to ADE. That's all within student attendance, and we move on to information technology, which is also a pretty big section for which we have nothing to report on. There's one question on transportation support. Every year, the district's required to submit what's called a Trans 55 report, which is where the district is reporting the miles up to the 100th day, so the actual miles that they traveled on the bus routes, as well as the students that they transported. We couldn't agree what was reported on that report to the district's support.
Can you also explain how it wasn't for last year?
Oh, correct. So, and this is not for last year. We're always a year behind on this because the transportation information is used in the budget for the year that we're auditing. So we looked at the transportation report that was submitted for 1920. But that's all we had to know. If you have any questions, I'm more than happy to answer any of them.
So the findings that you have for us, how many of these are common throughout the state?
They're all common to some extent. We didn't know, I mean, you know that the material weakness is what we focused on the most, and that's what holds a heavier weight, I guess. But student attendance are pretty common. A lot of times procurement, just because there's very many different requirements within procurement as well. Procurement is also something we see out there, like the accounting records question, like that broad question I talked about is also a pretty common question. That's why I
Timely cash receiving, that's a common. Yeah, sometimes districts want to know how many findings they have, and sometimes it's more important to talk about the qualitative aspect of it than how serious are the findings, because you can have 100 very small findings. And that may not be as bad as one very large, serious finding. So sometimes you don't want to get too caught up in counting the number of findings, especially when we're talking about state compliance. That was a long discussion that Cynthia just went through, and that's probably only 25% of what we looked at, because of how thick the USMR is and how much we do to answer these questions. I mean, you saw there's a bunch of yeses in there too. If you want to quantify it, compare your yeses to no's, you know yeses to no's.
So what level would you give us as a score? Grade.
Yeah.
Grade. Since we're out of school.
Well, we're not going to answer that question.
Standards-based. Qualitative.
I'm not going to answer that question with grade. I guess just keep in mind that there's competing sets of audit requirements. There's the financial statement audit. The grade there is, did you get an unmodified opinion? And you did. You got a clean audit opinion, meaning these financial statements, based on our audit procedures, there were no material mistakes. These are reliable financial statements. That's what it means. So that's your grade, if you will, for financial audit. For the state compliance audit, this is your grade. You decide what what you think of that, where you want to focus your efforts in the coming year to take care of those issues. Just know that this is reported to the Auditor General. The Auditor General really is the one who decides grades, right? To answer your question, our mechanism is to report the information. Their role is to make decisions.
So our responsibility then now is to not only address internally what we need to do to change this, but also, do we have to report to the Auditor General a response to this audit?
No, I mean, unless they ask for it, unless they come to you and ask for information. But no, that is, this, like I said, like Cynthia said, it's small, it's tiny, because this is an Auditor General website. This information already went to them. This is in their hands. They get it from every school district. Everybody has to file this. They decide if they want to contact you afterwards. I'm sure you've heard of like the 90-day letters, or in worst case scenarios, it's a receivership where they take over a district. Obviously, it's not anything what we're talking about here. But a 90-day letter would be, they see your compliance questionnaire. They also get a copy of your financial statements. You're required to file that with them, so they will see that material weakness as well. But what they do is they evaluate the seriousness of the situation. And a lot of times they look at it over a multiple year period. It's not just a one point in time decision on their part. They look and see if you're making improvements or if you're going the wrong direction, I believe. I don't speak for them, but that is our understanding. And if they don't like or they want to know more about it, occasionally they will issue what they call a 90-day letter, which is, show us, we want you to give us a corrective action plan for these items. And you've got 90 days to do it, and in 90 days, we're gonna come down and we're gonna see if you've done the things that you said you're gonna do. But that is something that they start that process. So if you don't hear anything from them, that's not something that you need to address.
And of course, Greg and I have already sat down and gone through these items, and we did with Cynthia as well, even as the audit was occurring. Okay, what does this look like? What do we need? What do we have to do? How is it done in other districts? How did we get to this point? How were we doing it before? And like we talked about, the change in business managers, and what we have picked up in transportation, and the work we've done in payroll, like all of that. The work we've done in the past is reflected also in those other areas where we worked hard to clean those areas up. So now it's just going on, why, and what do we have to do now, and who's going to do what.
One other thing to keep in mind going forward, just one of the faults, if you will, with an audit is we're performing our audit in January. So you're already 7 months into this fiscal year. So any finding you see reported here potentially could be reported in fiscal year 22, but not due to a lack of care from management. It's because they weren't notified until now. This is when we came across it. And you can see the way the question is written. It's a yes or a no. It's not a, yeah, they had an issue for 7 months, but they were good for the other 5. It's
not a yes or a no.
So just keep that in perspective. If you see repeat findings, sometimes it takes 2 or 3 years for it to cycle out before you make a decision on whether that need to approach it or address it.
Anyone else?
So next steps will be, we have time, like we mentioned, 13 days before our board meeting. So as you go back and look, and now that we've had a little bit more conversation and explanation from Cynthia and Mike, then we can continue to ask questions, and maybe we can have you on the phone the day of the board meeting. Cynthia and Mike, if you want to call into the board meeting, but definitely we can get the questions answered prior to the 21st, as you have them and you bring them to our attention. And as soon as you get the bound copy,
It should be straight here.
it should be here. Okay, so as soon as we get them, we will let you know, board members, and if we can have you come pick them up, or we'll deliver, but we'll make sure you have them, because I know that you want to mark them up and put notes on the actual document, might help guide questions and answers for something like that. Okay. Anything else?
Thank you, appreciate it.
I guess with that, we're adjourned.
Yeah,
Thank you so much.
Thank you.